Hey guys, this is Jamin Kirkwood with Secure Financial Management. I want to get a quick video out to you about some things that have happened recently in the market, answer some questions we've been getting from clients, and also update you on some changes you might have seen and made in your portfolio in the last couple of weeks or so. So let's dive straight into it, start talking about the markets and what's been happening. Pretty impressive the extended run that the markets have had recently. You know, back on March 23rd, which was the lows of this whole event that we've been dealing with, if someone had said to you, hey, don't worry, in 2 months this whole thing will turn around and you're going to be within, and this is accurate, within 10 to 11% of the highs that the market put in late February, late to mid-February, it would have been hard to believe it, right? And I think I would have struggled to believe them too with what we were dealing with. You know, the Dow was down 2,000 points one day. You come in to the office, the next day it's down another 1,500 points. Kind of crazy. And I think equally surprising that it's turned around to this level. And so the question is, what's turned this around to this extent? And is it too much too quickly? Right? And we'll deal with both of those questions. Let's talk about what's driving this to start with, right? And to answer that, I think we need to talk about leading and lagging economic indicators. And so when we're talking about leading and lagging economic indicators, the key is somewhat in the name there, right? Let's talk about a lagging economic indicator. So a lagging economic indicator, a great example is the unemployment rate. So today, in fact, weekly unemployment data came out. Another 2.1 million people filed for unemployment benefits, leading to a total of 40 million. Kind of a big number, right? And that's a lagging economic indicator because that's happened, right? And it's data that we've now got that's already passed and it's occurred. It's lagging data, right? Leading economic indicators, the stock market being probably the most famous leading economic indicator, is essentially forward-looking assumptions on what will happen. So I think it's easy to make the argument that the forward-looking indicator, the stock market, is going out and assuming that, hey, states are starting to reopen. Yeah, there's 40 million people in unemployment, but don't worry, as states open, they are all going to go back to work pretty quickly. And, you know, we're going to have a vaccine this year, mid next year, whatever. And don't worry, it's all going to be okay. We're going to go back to normal. Long run, I think that's true. Now, is that 6 months, 12 months, 18 months, 2 years? That's the $64 million question, right? But if you look at the gains the market has had, that's the story that has to be built in to essentially have this play out, right? What we've actually done recently for clients, and this goes into some of the changes you might have seen come through in your emails talking about trade confirmations and stuff like that, is at this point we decided to de-risk our portfolios a little bit. We have a lot of the losses gained back over the last 4 to 6 weeks. Certainly not the whole amount, right? Anybody who was invested and stayed invested, they're not back at those highs because we're just not back there with the markets yet. But a lot of the gains had been returned to us. And so we decided at this point to de-risk the portfolios a little bit. So what does de-risk mean, right? Does that mean we cashed everything out, put the money on the mattress, and ran for the hills? Absolutely not, right? All de-risking means is that what we've done is we've lowered the percentage of allocation that we have to equities because we've had such a big return, right, back towards where we were. And we want to take a little bit of that risk off just because there's uncertainty in the next 3 to 6 to 9 months. So the story the market is looking at now is that everything just gets back to normal relatively quickly, right? And that may be the case. But there seems to be a lot of uncertainty with, you know, how many of those 40 million people are going to come off unemployment, how quickly, right? Is travel and restaurants, and is everything going to start to return to where it was as swiftly as where the markets think it will? Maybe, it might, but there could also be some hitches, right? It may not happen as quickly as it is viewed right now. So we want to take a little bit of that uncertainty off the table for our clients for a little while, right? De-risking also doesn't mean that that's the allocation we have all the time, right? That we never put that portion back in the markets. Absolutely, it doesn't mean that. It just means that while there's a bit of uncertainty, we want to go ahead and do that. And we do that for our clients because our clients are a demographic that is either in retirement or very close to retirement. So they're certainly not very aggressive investors, and we need to be prudent and mindful of that as well. If you watch these videos enough, you'll hear that famous statement that I always make at the end, hey, this should not be considered an investment recommendation, etc., etc. That's why we say that, right? Is that for our clients, we know them well, and we know what we need to be doing to make sure we're protecting them as much as possible. But any of you guys watching this video that we don't have relationships with, we're not sure of that. So that's why we always say that, right? And the last thing as I wrap up here that I don't want you to take away from this video is that this is not a doom and gloom message, right? That is the last thing that you should interpret from this. There's a very famous investor, you know him, Warren Buffett, right? And he's famous for saying, hey, you shouldn't bet against the American economy and the American people, and I believe that 100%, right? Long run, this will flush its way out of the economy and we'll eventually get back to a normal. Over the next 3, 6, 9 months, maybe 2 quarters or so, there's a bit of uncertainty. And we want to make sure that we're protected and hedged against that uncertainty. All right, guys, if you have any questions about this, make sure you reach out to the office. We can have a more in-depth discussion. And as always, I'm going to say that famous statement again, this should not be considered an investment recommendation. If you have anything you'd like to talk about with your personal finances, please give us a call at the office, 210-428-6250. We'd be happy to speak with you.